Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, November 29th, 2019. We are again in the final hour of the trading day, the abbreviated trading day. The market closes early today, closes in 1 hour, so that's why we're doing this live stream a little bit early. So anyway, I hope everyone's doing well. I hope you had a nice Thanksgiving and ate a lot of food and hung out with your friends and your family. So as I just mentioned, we're in the final hour of the trading day. Not a lot of participants today. Historically, a lot of the big traders take today off, so not as much volume today. But we'll see what happens. But in any case, during the last hour of the day, in my opinion, I believe that they're the most valid prices to make your buying and selling decisions from during the day. You have a lot of noise from algorithms, from day traders. At the end of the day, you do have the large financial institutions, you have the market makers coming in, making their final decisions of the day with size and volume, and that is why I prefer to make the majority of my buying and selling decisions right at the very last few minutes of the market. So that's what we're going to do today. So anyway, hope everyone's doing well. Hey John, good to see you. John says NVEE for today. Okay, we will definitely take a look at that for you, John. Hope you're doing well. Hope you had a good Thanksgiving. Hi Evan, good morning to you, sir. Hope you had a nice Thanksgiving. Thanks for coming by. Hey, there's our friend Gamer Squad. How you doing, Gamer? Hi, thanks for doing this today. You are certainly welcome. Did you finally get that snow over there in Denver, Gamer? Boy, I'll tell you what, interesting Thanksgiving for me, but I'll tell you guys about that in a little bit. But anyway, so the format for today, first of all, we're going to go ahead, as usual, run that U.S. legal disclaimer. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, what methodology I used, what kind of setup I used to buy them, and then most importantly, how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. It is very important that you learn the skill of trading, looking at support, resistance, all that kind of stuff. But it's most important, in my opinion, that you learn how to manage your emotions and stick with your plan. When things are going great, it's easier to stick with your plan. When things are not going so great, it's easy to get frustrated. It's easy to have your emotions get amplified and make bad decisions, deviate from your plan. So I am going to talk about trader psychology. Hopefully talking about this every day will help ingrain into you, and you can internalize the importance of sticking with your plan. So we're going to talk about that. Then we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at the support. We're going to take a look at the resistance levels. We're going to take a look at indicators like MACD, RSI, ATR channels, moving averages. And the way that I view trading is that if I have one indicator that sets up or triggers, I consider that a group of buyers. And if you want to have a profitable trade, if you want to put yourself in the position to have the best position to have a profitable trade, you have to be in with other buyers, and the more buyers, the better. So if the more buyers are better, then a confluence or a combination of indicators lining up at the same time, because I consider each indicator a group of buyers. If you can look for a confluence or a combination of indicators lining up at the same time, then I look at that as multiple groups of buyers. And if having as many buyers as possible increases your chance to have a profitable trade, then looking for a confluence or combination of indicators lining up, I consider that several groups of buyers lining up. So that's what I like to look for. I like to look for a confluence of signals lining up. So after that, if you can find that, that's wonderful. Then you have to take a look at risk to reward. Sometimes you can get a really good signal, but it might be too high in the channel. The RSI level may be too high, and I may have to pass on the trade. So look for a confluence of indicators. Step number one. Step number two, look for good risk to reward. Make sure you have more reward potential based upon the resistance above you than support of your risk or support underneath you. So that's step 2. And then step 3, make sure you don't have too much correlation. Make sure you don't have too many stocks that are in the same industry. It's good to have a diversified portfolio of trade positions going on. So that's what we're going to do. If I can find something that lines up, confluence of indicators, good risk to reward ratio, not too much correlation, I'll go ahead and buy the position at the end of the day. And then after the market closes, if anybody has any questions, please let me know. Happy to clarify anything that I discussed today. If you're not quite sure, please let me know. Just type it in the chat. Don't be shy. And then I'll do my best to explain it. If you have any other questions about trading, please let me know. If you have any stock symbols that you would like me to take a look at before the end of the day, please let me know. Just point it out in the chat, put a little star by it, or like John says, mention that it's something you want me to look at for today before the market closes. So that is the plan. Oh, it's great. We have 11 viewers today. I wasn't sure how many viewers we were going to have. So let me go ahead and run the U.S. legal disclaimer, get that out of the way. I will be back in about 40 seconds, and then we'll get to work. All right? Hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. So I had a crazy Thanksgiving. We had a huge amount of snow here, over 2 feet, really heavy, and in the middle, very early in the morning, my awning came crashing down. Heard this big, huge crash, and it was brutal. It just devastated the awning and tore some of the soffit and the fascia off, rain gutters down, all that kind of stuff. So anyway, gonna have to deal with that. Was on the phone with the insurance, and then I had a huge tree get uprooted from the wind, so blocking my driveway. I can't get out. After the podcast, I'm gonna have to go out there and cut it all up so I can get out. And then the city did not plow our street, and it is so much snow. Like we're all trapped in here like prisoners. So it's been an interesting weekend, not weekend, but Thanksgiving. But anyway, I'm glad Katie is safe. My dog, normally she would have been outside and she would have got trampled by the awning collapsing, but thankfully she was inside. So anyway, all right, John, let's take a look at NVEE for you. NVEE. Okay, well, obviously it's in a downtrend here. I do like that we're basing, right? We've down, then finally finding support. When I talk about V1s, V2s coming back in the value zone, this is what I like to see. Actually, basing at any time is good, but here you still have more supply than demand. That's why it keeps going down. But at least we've been going sidewards here. Wednesday, we crept back up over the third ATR channel, which is good. We're still at a 27.15 though. Generally, I won't buy anything under 30. If it were me personally, I'd probably wait for this to at least close above 30 RSI before I bought it. But a couple good things. I mean, we are going sidewards, showing that the selling is drying up and at least some buyers are coming in to stabilize it. We are back over the third ATR channel, negative third ATR channel, which is good. Showing some signs of life there. But if it were me, John, I would still wait until minimum we closed above 30 RSI. So I hope that helps. Let me know if you have any other questions. Evan says, good morning. Oh, hey, Evan. Oh, that's right. I already said hi. And then I already said hi to Gamer Squad. The Gamer Squad says, still lots of snow there in Denver. Yep, I feel you. Bing He, hey, how you doing, sir? I don't think Bing He has any snow there in Singapore. Thank you for getting up early and coming by. Dr. Long, hey, how's it going, Doc? Good to see you from Chicago. Hope you had a good Thanksgiving. Thanks for coming by. Steve says, oh, Steve Byrne, hey, buddy. How's it going? Good to see you, sir. Thank you for coming by. Thank you so much for the mention of my channel in your Twitter post today on your list. I always appreciate that and hope you and Holly had a nice Thanksgiving. Always awesome to have you here and always an honor. Steve says, how is the snow where you are, Greg? Tons of snow. I don't know if you just mentioned, but my awning collapsed, trees blowing down, can't get out of my cul-de-sac because the snow and there's no snow plowing. So it's been an interesting day, but tons of snow. I haven't seen snow like this since I was a kid, and super, super heavy. Bing He says, I took PRSP as the previous session had a 50 RSI crossover. I take that as a signal. PRSP. I don't think I have that one. Bing He. PRSP. Yeah, I think we talked about this Wednesday, right? Unfortunately, I don't have that in my stocks to take a look at. I apologize. How's the trade going for you? Steve says, my Beyond trade still going in my favor. I saw that. Look at this great trade. I'll tell you what, I would have taken this trade. I just, I hadn't looked at it, and I actually missed your newsletter that night, or the night where you first talked about it. But I mean, look at this great trade. Under 30, over 30, basing situation going on under here. Look at this. Great 2-day trade for Steve. Congratulations, my friend. Very, very nice. So I'm gonna be watching Beyond Meat now as well, because as you say in your video newsletter, I mean, it is a big industry. It seems more rational down here than it was when it was in the big bubble phase, when it was much, much higher. You can see, I mean, look at this. Up here it was hugely bubbled out up there. I know there were a lot of shorts. It looks like it worked out for them, but now it seems a little bit more reasonable. But Steve had a great trade, under 30, over 30. He's had 2 nice days moving up. Look at that, up almost 3% today. Dr. Long, bought VIX over 30-second time in 3 days. Also bought AGQ. Bought VIX over 30-second time. 30-second time. Well, VIX is up today for sure. Gapped up. Seems like it's holding that gap. Looks like it might get over the third ATR channel, which definitely means something. It's still at 2563. But anyway, hope that works out for you. And you also bought AGQ. And AGQ's double leverage silver. So yeah, I bought silver a couple days ago also, and then I got stopped out Wednesday. Up a little bit today. Oh, this is double leverage. Okay, so it's up 0.38. So normal silver would be up about half of that. A little bit more than half. So, all right. Well, hopefully those go your way, Doctor. Appreciate you coming today. Wendy, hey, how you doing? Oh, from Singapore. Our friend Bing He is from Singapore. Thank you for coming, Wendy. Tropical Singapore sounds pretty good right now. Listen, if there's anything I can help you with, Wendy, you please let me know, okay? Be happy to answer any questions you have, and thank you again for coming. Steve says, that sounds crazy there. I was concerned it may knock out power in the internet. Oh, let's not tempt fate. If the podcast or the live stream cuts out, you'll know what happens. So yes, I'm glad, I'm thankful we still have that. Dr. Long says, snow is heavy. Yes. Steve says, amazing you are able to do the broadcast today. Glad Katie is safe. Yeah, it's been crazy. It's been crazy. It has been crazy. I'll tell you what, the snow not getting out, the tree, the awning crashing. Hey, Jesse, what's going on? Good to see you, sir. Hope you're doing well. Let me know if there's anything I can help you with today, sir. All right. Bing He says PRSP up a bit after I entered on the opening. Okay, good. Glad to hear it. And I wish I could look at it for it. Bing He says we never have snow here. Frank says, hi Greg and all. My trade is NTXX 35. NT and X. Oh, very nice. So you bought it at 35 even. So it looks like you bought it maybe at the close yesterday. Beautiful update today. 79 RSI. Awesome. Well, it's gone parabolic for you. This is fantastic. Just make sure you have a plan in place, but it sounds like you do. Gamer, I am listening to the program with my 10-year-old daughter. She wants to learn. Oh, man. I'll tell you what. If you have children, do them a huge lifelong favor and get some kind of monthly money going into an account for them. I don't care if it's $10 or $30 or $20 or $100 a month. You will change their life when they get older if you start some kind of contribution every month into some type of account. I mean, literally. Your biggest advantage in investing, long-term investing, is time. And so, I mean, if you can put away $1 a day, if you can put away $30 a month for your children early on, the compounding, the growth that can happen over time can make a huge difference. So anyway, just want to mention that. Dr. Long says, I have VIX over 30 RSI. Oh, see, I have it at 2610. You bought it before it was over 30? Is that what you mean, Doc? All right. Tell you what, let's get going here, and I'll get to the questions, the comments after. Let's take a look. So, all right, Amazon. I did buy Amazon back here on the 25th of November. I bought it with this close above the 250-day moving average. This is a good back-tested approach. If the next day it had gone down and closed even 1 penny under the 200, I would have gone ahead and just gotten out. That's why I like buying over these major moving averages. It gives me a good risk to reward ratio. If I'm right, I can stick with it. If I'm wrong, I can immediately get out. And that's the key to trading, right? Big gains, small gains, break-even trades, or small losses. That's the formula for profitable trading. And in this case, we were fortunate enough to have it go up nicely for us. So we bought here at 1774.16. It's been moving up. It did close above the 200-day moving average on Wednesday, which is a good sign. Today, it does look like it might close under the 200, in which case I will most likely go ahead and just lock in profits here, because as it moves up, I want to start trailing my stop. I don't want to give it all the way back. So if this does close under the 200-day moving average today, I will go ahead, just lock in profits on this one and call it good. And then if it closes back above the 200 in coming days, I may consider taking a new entry. But so far, so good. Home Depot. So I did buy Home Depot back here on the 25th of November when it went under 30, over 30. That's one of my signals, is even intraday if it goes under 30 and over 30, which is what happened. In addition to that, we had a V1. Here is day one. Day two washes out day one and closes above day one. I talked earlier about looking for a confluence of signals, and here are two signals, under 30, over 30. At the same time, we had a V1. And the reason V1s are important is because they show you that the price tried to go down to lower levels that current day. The market didn't find any other sellers down there and went back up. So it reversed back up. Doesn't mean it can't go down in the future, but I still think it's important information to have, that you, even that day you tried to go down and close back up, right? That's very relevant information because the market already tested it before you got in. So anyway, this has worked out nicely for us. We've had 2 nice days up on this. Did move significantly higher than 1 ATR away from my entry. When that happens, I do like to lock in, or I do like to implement a trailing stop. My trailing stop here would be today if it closed under Wednesday's low. Wednesday's low was 220.66. Right now we're at 220.41. So if we do close under Wednesday's low, I will go ahead and just lock the profit in on this trade. But one of the reasons I like to scale out is that I did hit profit targets up here at this higher level. I always like to take profits when the market gives them to me. Not lock in the whole position, but just take bits and pieces off as it's going my way. Dr. Alexander Elder always told me when I studied with him, when the market really wants some shares at higher prices, go ahead and sell them to it. Go ahead and sell those shares to those people, right? Traders are either manic or depressive, right? And when they're depressive and want to sell their shares, be there to buy them from them. When they get manic and really want to bid up the price, go ahead and sell some. So I always do phase out when it goes up a certain amount. But this looks like it's going to be right on the bubble here, whether this is going to close under or over or Wednesday's low. So we'll have to watch that. But so far, so good. And if it does close under, I'll go ahead and just lock in profits for a three-day position. Okay, world famous SPY trade. So I know I mention this each day, but in case we have some new viewers, I do want to explain to them why I take this trade. But I do buy the SPY each day at the close of the market, and I sell it first thing the next morning. Has nothing to do with technicals, has nothing to do with support and resistance. It has to do with the study from Liz Ann Saunders at Bespoke Invest on Twitter. She's the chief investment officer of Charles Schwab. But with this back study, we have two options here. They tested two variables. First one was buying the SPY each day at the open in the morning, selling it at the close every day. So buying at the open, selling at the close, buying at the open, selling at the close. Doing this every day from 1993 for all your work, hard work, you would have actually returned a negative 13.9% for all your troubles. However, if you did the opposite, which is what I do, buy the SPY at the close instead of the open. So buy the SPY at the close each day, sell it the next morning at the open. So buy at the close, sell in the morning, buy at the close, sell in the morning. If you would have used this approach every day since 1993, you'd have actually returned a positive 634.2% return. So between the two, this one far outperforms the first one, right? So this is what I do. I've been doing it every day since February 26th of this year. It's been extremely profitable. It's a very easy trade. Doesn't mean it's going to work in the future, but it has worked very well since 1993. Here's a chart. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a clear advantage. There's a clear edge to holding this overnight. A lot of day traders do not like to hold overnight. They feel like it's dangerous, but when you look at the statistics, they're clear. The clear edge comes from people buying in the afternoon, selling the next morning. What this is telling you is from 1993, all the gains in the stock market have come from people bidding it up in the aftermarket, selling it, and bidding it up in the pre-market and selling it into the open. So I will be buying this again at the end of the day. I love this chart. It shows you if you have an edge in your trading approach, what it can look like in the long run if you're able to stick with it. There's ups and downs. This is to be expected. Doesn't matter how good your edge is, you are going to have some drawdowns. It's just normal part of the process. But so with that said, you would expect that it would be a huge gain today, right? It's not how it works, right? But there is an edge. There is an edge with this. But I did buy this Wednesday at 315.48. Did gap down today. Sold at 314.89. We are slightly lower than where I sold it. We did have 5 days in a row of profits. So anyway, that is how it goes. Just a normal part of it, wins and losses. I remember back in May of this year, 80% of my overnight SPY trades were losers. It was brutal, right? But if you look since February 26th till now, it's been hugely profitable, almost responsible for about a quarter of my profits this year, just this one approach. So losing trade on this overnight trade, but I will be buying this again at the end of the day and selling it first thing Monday morning. All right, Twitter. I did buy Twitter back here on the 21st of November. As I mentioned before, I like to look for a confluence of signals, and the confluence of signals here was the day that I bought it, it closed over 30. The previous day was under 30, then it closed over 30. In addition to that, we had this nice V2, day 1, day 2, day 3. Day 2 washes out day 1, tested the lows down here. Next day went up, closed above day 1's close. This is considered a V2 entry, trigger entry, and so we went under 30, over 30, had a nice higher low V2 back in the value zone. MACD was positive, and you can see this has been a great trade so far. We've ridden it up, scaled some more up here on Wednesday. It has moved, definitely more than 1 ATR away from my entry when I implement a trailing stop today. Currently, it looks like it might close below the previous day's low, in which case I would just go ahead and get out here today and lock in the profits on this trade. So anyway, really great trade on Twitter. Lastly, McDonald's. I did sell a put on McDonald's down here, $180. When you sell puts, you want the price to stay above that strike price by the end of the expiration period. When I sell puts, I like to look for technical support on not just one time frame, but 3 time frames. On the monthly time frame, because some people just trade monthly bars. So, right here, the $180 price is smack dab in the middle of the 1 and the -1 ATR channel. It's at the midline. This should offer some kind of technical support. So that is why I picked the $180 price on the monthly. On the weekly, the $180 price in the very low 30s and has the 100-week moving average above it. So this should also add some kind of support on people that trade weekly time frames. And then on the daily, the 180 price, strike price, way down here, right now getting about 5.5 ATRs. Anytime you get down to the 5-6 ATRs, very difficult to get stock prices to stay down there. And so that is why. So I have support on the monthly, I have support at the weekly, and on the daily, and that is why I decided to sell puts. So as long as McDonald's stays above 180 by December 13th, I'll be able to get all the premium from selling that. So anyway, that's that. All right, let's take a look here. Steve Burns says, compounding returns on capital is where the magic happens. I'm telling you, do yourself a favor. If you have children, go out, open an account. Just put away $1 a day, in probably just the SPY. As good as anything, probably better than anything, right? But man, by the time they're retired and they don't touch that money and they keep, contributing money, life-changing. So my advice is go out and do that if you have kids. Oh, Dr. Long says it was on a shorter term chart. Okay, makes sense. 8-hour, bad close, and I'm out. All right. Well, we'll see what happens. It's up today. Frank says, I read a key Fibonacci level on Amazon is 1807. I would buy Amazon at $18.07. I think you mean 1807. So yeah, that's right where we're at. So we'll see how that closes, Frank. Hi, Man Solo. Good to see you. Thank you as always for coming. I appreciate it. Dr. Long says, market open 6.5 hours a day. Somehow I found 8-hour bars are better for me. Oh, interesting. Interesting. With fractals in the market, fractals are cycles within cycles. And yeah, I mean, if I look at things intraday, I look at 39-minute charts because 390 minutes in a trading day, 10 charts gives me exactly 1 trading day. So doesn't matter what you use. The important thing is that you are consistent and stay with it. All right, so listen, this is the time of the day where I like to talk about trader psychology. There's some really good Twitter channels out there that put a lot of time and effort into posting good trading words of wisdom, things about trading psychology. And one of the best on Twitter is Trading Composure, at Trading Composure on Twitter. If you haven't subscribed, I would really suggest that you do read his post each day. They're great posts. Internalize what they say and incorporate them into your trading. But he says, as a trader, you will often go from one loss to the next. Okay, right? We've all experienced that for sure. You must not let this normal occurrence affect you on an emotional level. You must keep placing your trades with discipline, vision, and a renewed focus on risk management. And it's so true, everybody. I said earlier in the podcast that if you get into a string of losses, you get frustrated, your emotions get amplified, you might want to revenge trade, you might want to put on too large of a position, you might get down on yourself, start hating trading, not taking the next trade. But listen, strings of losses are totally normal. I mean, Warren Buffett has lost 50% of his account value, I think 3 or 4 times. Right? So, but don't let it get you down. Just understand it's part of the process. But the most important thing is if you do go into a drawdown, don't revenge trade. But on the other hand, keep taking your trades, right? I know so many people that have gone through a string of losses. They're disgusted. They're just, the wind's taken out of their sails and they don't want to take the next trade. And a lot of times that's a trade that's going to work for you. So, and the reason why people get disgusted or down or worn out with trading is usually they have too large a position size. If you have a good conservative position size, like a 10% position size, you might, when you run into a string of losses, which will be for sure guaranteed, take that to the bank. If you position size correctly, you're going to be okay. You can weather it. It's not fun, but you can be okay. But if you take huge position sizes, make a huge bet, goes against you, you stay with it to the downside, that's when really bad things happen. So one more time, as a trader, you will often go from one loss to a next. Often is the key word. You must not let this normal occurrence is also key word because it is normal. You must not let this normal occurrence affect you on an emotional level. You must keep placing your trades with discipline, vision, and a renewed focus on risk management. So if you get to that point where you're starting to go through a drawdown, please take my advice. I've been doing this a long time. It's normal. It's going to happen. Don't be destabilized. Don't revenge trade. Just renew your focus on your discipline. Make sure going forward that you're in a vulnerable area and you need to use extra energy and burn extra calories on staying disciplined and with a renewed focus on risk management. Because remember, at the end of the day, we're not traders, we're risk managers. Once I really internalized that saying, it made a lot of sense to me. I'm just managing risk. The rest will take care of itself. No matter what approach you're using to trading, the rest will take care of itself if you just focus on managing your risk, keeping those losses small. So thank you, Trading Composure, for all the work that you do and all the great posts that you have. Okay. Hey, Christopher Hitchens. Thank you so much for coming by. Appreciate it. Hope everything is well in the UK today. Christopher says, can you use V1, V2s on 1 hour charts, Greg, or is the market noise more of an issue? Yeah, you can use V1s, V2s on intraday charts as well. I mean, the longer charts you go out, the more stable they are, right? If you can you use a V1 or V2 on a 1 hour or a 1 minute chart? Sure, you can. But a V1, V2 on a 1 minute chart is not as strong as it is on a 1 hour chart. But the concept's the same. The concept is that you are rejecting a previous level. The market, whatever your time frame is that, like on this V2, it's rejecting the previous day's low and then reversing the next day. Whether it's a 1 hour chart or a 1 month chart, it's showing you that in that time frame that that washout bar was rejected, which is great information to have. Does that make sense, Christopher? All right, let's take off. So the Dow's down 92 points right now. So we are having a bit of an off day here today, right? Let's check our current positions real quick. So Amazon closed under the 200. I will get out, lock in profits. That looks likely. Home Depot, pretty close to our stop here, 220.66. So have to watch that one carefully at the end of the day. Twitter definitely looks like it's closing below the previous day's low. I'll have to go in, take profits there. And of course, McDonald's is fine because it's a put. Okay. Well, let's go down through here and see if anything looks interesting for today. And I'll be watching the chats here to see if you guys want me to take a look at anything. Christopher says that's great. I'll tell you, V1s, V2s are such a huge part of my trading, Christopher. Regardless of what approach you use, if it happens with the V1 or V2, your odds have really increased. I learned this from Kerry Lavorne. He developed this method, and really glad that I learned this, because in conjunction with how I trade, you know, I mean, if I have if I have two trades, one goes under the 200 and back over the 200, and then I have another stock that goes under the 200 and back over the 200, but also has a V1 or a V2, I'm definitely going to pick that one over the previous ones just based upon that. But it's a huge advantage. I mean, regardless of how you trade, if you institute a V1 or a V2, you're going to see your results improve. Guarantee you. All right, Apple. So Apple is pretty high here. We have a high, we had a dip. We're pressing to test that high, but momentum is quite low here on this move up. You can see on this big leg up here, we had strong momentum, tall MACD bars, green bars showing positive momentum. Then we had a pullback. We had negative MACD bars showing that declining momentum or increasing momentum to the downside. Now we're rallying back up, but we don't have any green bars. So Dr. Alexander Elder would call this a double top with a bearish divergence. He would look at this as potentially bearish. Wouldn't mean that he would short here, because remember, if you have a divergence setting up, whether it's a bullish or a bearish divergence, it doesn't mean, oh, there's a divergence, go ahead and take it. You have to wait for the divergence to happen, then you have to have it qualify, or you have to have a trigger to get you in, or confirm to get you into the trade. So nothing on Apple. Need a pullback. We are getting closer to the back into the value zone, which is the 1 and the -1 ATR channel. But I've been waiting for a pullback into value and look for a V1 or a V2. If it keeps going down, of course, you know, I would be interested down here at the 50 as well. I mean, if we got down to the 50, the RSI would be quite low, but just not a good risk to reward ratio to get into Apple at this point. Although I've been saying that back here as well, and it's still gone up. But most of the time, right, we're playing the odds. 9 times out of 10, buying at these levels is not a good idea. But in this case, it was. But, you know, that's like saying got in a car accident and I wasn't wearing my seatbelt and I survived. Okay, well, good. I'm glad you survived, but it doesn't mean it's a good policy not to wear your seatbelt. Adobe, same thing, just been on a monster run up here, kind of hanging out here at the 3rd ATR channel. We're at a 77.28. Again, way too high for me to buy here. Need some kind of pullback. I don't want to buy at retail. I want to buy. I don't want to buy above value. I want to buy in value or under value, and I consider anything above the 1 ATR channel overvalued. Oh, give me one sec. Katie girl needs to go outside. Maybe she just wanted to go look at the awning. It's all mangled up. Anyway, so on Adobe, you know, definitely paying retail up here. I want to at least have it come back into a value or undervalue before I get interested in it. Advanced Micro Devices, big, huge run up, has had a bit of a pullback here, moving sidewards. We are just dipping our toe into the value zone. So if we can get a little further down here in the value zone, sideways movement, I'd look for a V1, V2, looking to buy that dip. Amazon, of course, we have. The break back over the 200 has been a great trade. If it closes under the 200 day, though, I am going to go ahead and lock in profits. Boeing, Big move up, has started to dip, has started to come back into the value zone, which is what I'm looking for. That's the first step. Now I need to see it move sideways for a couple days. What I'd really like to see is a nice V1 or a V2, which goes under the 200 back over the 200. That might be an interesting spot to buy Boeing, but it's in the value zone, but it's not quite there. I need some sideways movement in a V1 or a V2. Berkshire Hathaway. Okay, so I was waiting for it to come back into the value zone. Good thing didn't buy up here. Wait for the value zone. Did come back into the value zone. Did move sideways one day. I was waiting for one more day sideways, but no V1 or V2. So unfortunately, wasn't able to buy this dip. But again, if it's above the 1 ATR channel, I needed to come back into the value zone, have a couple days sideways movement, and then a V1 trigger. So it did, everything came in. It did get in the value zone, did go sideways for one day, and's rallied since then, but I didn't have a trigger. Hey, Glenn Moody, good to see you. Thank you for coming by. I think this is the first time you visited us, so appreciate you doing that, Glenn. Glenn says, how do you size your daily SPY trade? By the same number of shares each day at the close, or just number of shares based upon your running PL? So Glenn, I base it, majority of my position sizes are 10% of my capital. So whatever my capital is that particular day, my total capital, 10% of that capital is the dollar amount that I'll buy the SPY. So if it's $100,000, 10% of that's $10,000. I would buy $10,000 worth of SPY in the afternoon, sell it the next morning. If it was $105,000, of course, I'd buy 10% of that. And if it goes under 100,000, then I'm going to buy less than $10,000 worth, right? So just 10% of the capital on that particular day is what I use to buy my SPY position. And it's the same for all my other positions as well. So I hope that helps. Bing He says, Greg, what is your thoughts on using candlestick pattern for entry and exit? All these years I just use open, high, close bars, bar charts. I don't use candlesticks, but I mean, there's some advantages with candlesticks, but honestly, I don't really look at them much differently. I mean, I can look at a regular bar chart and look in my, in my head, I can picture what it looked like on a candlestick. But Frank says, V1, V2 reminds me of rule, measure twice, cut once in working. Ah, good. Good. Yeah, it's already shown you that it doesn't like it down there, right? That's the advantage. Glenn says, okay, interesting, thanks. You're welcome. Caterpillar did come into the value zone, did have a V2. I missed this trade. It came into the value zone, moved sidewards, then had the spike down, reversal back up. I missed this trade. I got busy with another couple of trades at the end of the day and missed it. And anyway, nice V2, and it has worked nicely so far, hasn't it? Dow Jones, another double top with a bullish divergence. We have a high, very high, tall MACD bar showing a lot of momentum. We had a pullback. We had some red negative momentum bars. We are now higher than that previous high, but very low green here. So this is also a bearish divergence as well. So this is how Dr. Alexander would look at this. He wouldn't go ahead and immediately short this, but he would, some warning signs here. Walt Disney, of course, we had that huge move up to the 6 ATR channel. Just too high here, need to pull back into value. Etsy down today. Nothing. We did close above the 1 ATR channel looking for a pullback into value, which it is back into value now. Needs some sideways movement, and I look for a higher low V1. I did buy Etsy back here on the 21st when we went under 30, over 30. Had a nice V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3 closed above day 1's close. We also had a MACD crossover, and this was a nice 3-day trade. I bought it here, scaled, and did get out back here on the 26th when we rejected the 20-day moving average, the 20 EMA, and closed in the lower part. So it did move up after that, but now looks like it's getting close back to where I sold it. 1 second. Kitty girl, come on. Hey, come on. Here we go. Here we go. Here we go. Good girl. Good girl. Okay, sorry about that. So anyway, if I would have held on to Etsy instead of getting out here on the 26th, I most likely would have gotten out here today with the close below the previous day's low on a trailing stop. Ford, nothing really here. Has this 200-day moving average resistance above us. I don't like to buy this high anyway, so nothing there. Facebook up a little bit today. It's been on a nice run, but I want to buy that first dip. I want to buy the dip back into the value zone with the V1, V2 as my trigger. 5 below, just kind of moving sideways here. Earnings coming up. MACD is positive, but nothing on 5 below. Gold miners pretty strong today. Here's a higher low V2 here. Day 1, day 2, day 3, day 2 washes out day 1, day 3. Did close above day 1's close, and it has moved up nicely so far, but nothing here. MACD did go positive as well. That's the gold miners. Regular gold today, what I'm waiting for on gold, I'm waiting for a 520 crossover for me to get interested. The 5 EMA crossing over the 20 EMA, or a dip back down to the 30 RSI. Google down today. We were above the 1 ATR channel, came in, couple days sideways movement. This was a V2. Day 1, day 2, day 3, day 2, washed out day 1, day 3, closed above day 1's close, but it didn't wash it out. I like to see a washout of that day 1 bar by at least a quarter ATR. Now we've made a lower high. So the dip was bought, but it wasn't strong enough to go back up and test these previous highs. So for me to get interested in Google now, whenever I have a lower high, I need it to wash out that first low in order for me to initiate a new signal. So it would have to come back down here, then look for a V1, V2 down here. Goldman Sachs, lower high again. This is lower than this high, so I would have to have it wash out down here before I could get interested. Home Depot, of course, we bought that under 30, over 30 V1 trigger here. It's moved up nicely, scaled out, but it does look like it's going to close below the previous day's low, so I will be getting out if that's the case. IBB, nothing is stopping this monster. Look at this. Whoa, perfect. Need to pull back into value. Intel, pull back into value. We are into value. I just need to see this stop going down, show some sideways movement, some consolidation, and a V1, V2. So nothing quite on Intel. IWM, very, very strong. We do have a double top with the bearish divergence, though. Here's a high with these high bars. We had a pullback. We're higher now with lower MACD bars, showing a loss of momentum. So all of the indexes are showing this double top bearish divergence situation. Johnson & Johnson, moving up nicely, waiting for a pullback. I'd love to see a pullback into the value zone, V1, V2, at the same time a washout or rejection of the 200-day. This is really where I'd be looking for, right here at about 133. Coca-Cola was strong the last couple days, but back down. But we did close above the 1 ATR channel, back in the value zone, looking for some sideways movement, for some consolidation, and then a V1, V2 entry. Lockheed Martin, just too high, is starting to poke its head back into the value zone, but nothing there yet. MasterCard, very, very strong. I know I sound like a broken record, but need to pull back into value. McDonald's, of course, I have the puts down to 180, so those are looking fine. Altria, very, very strong, looking for a pullback. Merck, very strong, looking for a pullback into the value zone. Essentially looking for a dip buy, right? Looking to buy a dip. Microsoft down today. It's had trouble with that third ATR channel the last couple days. Tuesday went above, below. Wednesday below. So waiting for a pullback on Microsoft. Netflix, broken record, looking for that pullback into the value zone. Nike, same thing. We did make a lower high. So even if it comes back into the value zone, I need to wash out that first low before I can get interested. How are we doing on time? 10 minutes. Philip Morris. Okay, so we were above the value zone. You can see it came into the value zone, but there was continued selling. Then it finally did move. It did kind of, for a couple days, did have sideways movement, which is what I'm looking for. So above value, into the value zone, sideways movement, that's what I'm looking for. But technically today's a V2. Here's day one. Day two barely washed out day one. Day three today, it looks like it's closing above, but I can't buy it here. This washout was not enough. I needed to be at least a quarter ATR under day one's low. So anyway, it looks strong today. Looks like that's a dip to buy, but for the way that I trade and the filters that I have, I don't quite have an entry signal. PayPal, very, very strong. Look at this V2 here. Day one, day two, day three. Day two washes out day one. Day three closes above day one. And that has moved up nicely. Now we're over the 200-day moving average, but too high for me to buy up there. The Qs, again, double top. Here we have a top, strong MACD. We had a pullback, negative momentum. Now we're higher. So we have a high, pullback, higher. Look at the MACD bars. Very, very anemic compared to these. So again, and near the third ATR channel. So all the indexes right now showing double tops with bearish divergences, which doesn't mean short, but it's something I can definitely consider. Silver, waiting for a 520 crossover here. Looks like we did have MACD crossover here today, which is good. I did buy it here on this V2, but Wednesday it closed below halfway of the washout bar, so I had to get out, unfortunately, for a small loss, but I'm going to have to wait for a 520 crossover here or another V1, V2. The SPY, of course, we'll be buying this again at the end of the day. Did take the overnight loss on this one, but we'll be buying it at the end of the day, selling it first thing Monday morning. Bonds, strong today. Interesting here, it shows you we found support at the negative third ATR channel. We found resistance at the positive third ATR channel. 90% of prices tend to find support or bounce at the negative third, and 90% of prices tend to stall out at the positive third. So I like to look for entries at the negative third ATR channel, sell them when they get close to the positive third ATR channel. So treasuries, looking for a dip in a V1, V2. Tesla, okay, so we're above value, into value. We have had a couple days of sideways movement, which is what I'm looking for. Not quite a quarter washout here of yesterday's or Wednesday's low, but this is what I'm looking for. Above value, into value, back into value, and then a couple days of sideways movement to show there are at least some buyers there and that the selling has stopped. So I will be looking for a V1 or a V2 on Tesla. Twitter, of course, we bought this under 30, over 30 with the V2. It's been a nice trade for us. Looks like it will be closing below the previous day's low, so I'll go ahead and lock in profits on Twitter. United Healthcare, you guessed it, waiting for a pullback into value. Oil, oh my, look at this, down 4.45%. So we were above the value zone. Now we blasted through the value zone. Now we're under the value zone. So on oil here, I'd be looking for like a 30 RSI dip, ideally in conjunction with the negative third ATR channel. VIX, 27.31. I would buy this with the close over 30, but we are getting back over the third ATR channel, which is somewhat significant. Verizon, nothing there on Verizon. Walmart, a lot of consolidation in the value zone. If we could have one big washout bar to the downside, reversal back up, that would be fantastic, and I would take that trade. Energy, if we could get a V2 on Monday, I would take it. We were closed below the value zone, into the value zone, a couple days down. If I could get a higher low V2 on Monday, I would definitely take this trade, but nothing yet. Financials, need to pull back into value. Real estate, Nothing there. Utilities. Looking for a V1, higher low V1, higher than this low. We were under the channel, under the value zone, came into the value zone, sideways movement, which is good, but I'd like to see a stab down reversal V1 or V2, and healthcare. Just too strong, need a pullback. So I don't see anything here today. The only thing possible would be if Tesla did close above yesterday's close for a V1, but it didn't quite wash out. So yeah, I think I'm just gonna let that one pass. So I don't see anything for me today. Definitely it looks like I'm gonna have to get out of Amazon. Definitely looks, well, it's right there, isn't it? 220.66, so it looks like I'm gonna have to get out of that. Twitter, looks like I'm gonna have to get out of that. So what I'm gonna do right now, just because of time, I am gonna go ahead and get out of Amazon right now, because that definitely looks like it's gonna close below, and I have to get out of a couple account position on this. So I'm gonna go ahead, lock in profits on Amazon. That was a good trade. Very happy with that. All right, so Amazon's out of there. Home Depot at the moment looks like it's going to close under. Twitter looks like it's going to close under. Okay, so Amazon's gone. Okay, sorry guys. Okay, now. Okay, Twitter is gone. Home Depot is right there on the bubble. So I'm just going to hang out here. My SPY is going to buy at the close automatically. So we have 1 minute. All right, so I did get rid of Twitter. Did get rid of Amazon. Gonna get pretty close there for Home Depot. $220.66 is the Home Depot sell. So it's hanging right there at the support of that previous low. Oh, now it looks like it might hold. I sold it. Okay. Okay, good. It did close below, so I made the right decision there. And that's it. So Amazon out, locked in profits with the close under the 200-day. So that is taken care of. Home Depot under 30, over 30 with the V1 scaled out, close under the previous day's low. So I am out of Amazon. I'm sorry, Home Depot as well. SPY bought at 314.31. So did have a loss on that one, but better than the open, or good thing we got out at the open. That's all I can say. 314.31. That's the new entry on there. Twitter is gone with the close under, so that was a nice trade. So yeah, basically took profits on all my open trades. They are gone. So Amazon's gone, Home Depot's gone, and that leaves me just with SPY on the overnight SPY trade, and of course the options, the puts I sold on McDonald's. So that is it. That is it. So pretty flat here all in all. But it's been a, it was a great trading week, and nice to clear the table and just be patient, wait for some new setups. So all right, so listen, I'm going to get to the rest of the comments and any other questions that you have, but before I do, I just quickly want to put in my quick daily plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I have a 5-day course, 5 2-hour, 3-hour most of the time live Skype calls where I teach you one-on-one in the evening time via Skype, what I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all my coaches and mentors, such as Steve Burns, such as Kerry Lavorne, such as Dr. Alexander Elder. But, it's a pretty intense course. There's a lot of interaction, a lot of back and forth. During the first part of the lessons, I teach you. The second part of the lessons, I have you teach it back to me so that I know that you really know it. I throw a lot of curveballs at you just to make sure you're listening, but we do a lot of chart study. I have you break down charts. What's good about this chart? What's bad about this chart? What are the pros? What are the cons? Is there a good risk to reward ratio? So it's pretty intensive, but all my students seem to have really enjoyed it, feel like it was definitely worth the money. It is $1,000, but I think for what you get for $1,000, you learn a lot, and it's going to put you in a position to, I think, understand the market more clearly, be able to quickly size up the market, whatever it's doing, whether it's going up or down or sideways or what it's doing. But, you always hear about you have to have a plan and you have to follow the plan. But what I have found is a lot of people know a lot about trading, but they never put it together in an actual concrete plan. And that's what I do in the lessons. That's what I attempt to do with you. And, if you're interested, let me know. My email's in the description of this video. You can also send me a message on Twitter. But I like to have a free 30, 40-minute Skype call with you, just kind of interview you, get an idea about your trading history, how you got into trading, how you're doing, what your challenges are, what your goals are. And, then if you decide to become a client, then I'll put together a lesson plan based upon what you've told me. And then it's also a chance where you can interview me just to make sure we're a good fit. So, there's no cost and there's definitely no obligation for the Skype call. But if you're interested and, want to give yourself a Christmas present for next year, I think taking this class with me will definitely pay dividends. So anyway, there's my plug. But if you're interested in getting that Skype call with me, just send me an email or send me a message on Twitter. And then if you like today's podcast, I would appreciate it if you could hit the thumbs up button. It does really help promote the channel on YouTube. There's a lot of people out there that need help, that need some mentoring, that need some teaching. of good trading principles to them. And I think if they could find this channel, it really would help them. I have a lot of people reach out to me and saying, I'm really glad I found the channel. It really is helping me. I'm viewing the market, risk to reward, and all that kind of stuff in a different way. So if you could, on the way out, hit the thumbs up button. I really would appreciate it. So, all right. Hey, Joshua Kaufman, how you doing, bud? Good to see you, my friend. Hey, Greg, hope you had a great Thanksgiving. Thanks as always for making time for us. Hey, you are certainly welcome, Joshua, and thanks for making time for me and coming in. I really do appreciate it. Dr. Long says TLT is teetering. Yeah, so I talked about TLT a little earlier. It's a great example of price action finding support at the negative third and then finding resistance at the positive third. So that's why I don't buy up here at the third ATR channel. Majority of time, it's going to hit this. That's going to be all there is to it. Sometimes it's going to break on through and go through, and you're just going to have to be okay with that. But, you know, what I would be, TLT is a little overextended here right now. But as you guys know, when the price is over the 1 ATR channel, I want it to come back into value. Anything over the 1 ATR channel, the green line, the way I view this is overvalued. I don't want to buy overvalued. I want to buy back in value at the minimum or undervalued, right? So, but yes, it is teetering a bit, is holding the 50 RSI, is holding the 50-day moving average, which is positive, but you know, it might just take off and go from here. But the way that I view trading is I need to have some kind of pullback into value before I get interested. Dr. Long, sitting on midterm highs. Yes. Steve Burns, wow, look at USO chart today. I know, isn't that crazy? It makes me think of Murrett, because we know Murrett likes to trade oil. I think he trades with futures, I believe. But anyway, I hope he was on the short side of this trade. I don't know. He's not here today. But let's look at the weekly on oil. You know, it's always good to look at the higher time frame to see what's going on from a zoomed out perspective. Sitting smack dab in the middle of value zone. MACD is positive on the weekly. Looks like we did catch support at the 200-day week, or the 200 weekly moving average here, which is something. You know, for me to get interested in oil at this point, you know, the way that I view this is if it continues to go down, I would look for some kind of 30 RSI level in conjunction with the third ATR channel, in conjunction with the V1 or V2. I would definitely be looking to buy somewhere down in here if I got a trigger. If it doesn't go down there, now that it closed below the 1 ATR channel, I'd like to see it move back up into the value zone, then come off a little bit, and then look for a higher low V1, V2. Higher low V1s, V2s are always better than lower lows, because people buy these lows, but they're not sticking around for a long time. They're just waiting for a 2 or 3 day bounce, right? And then oftentimes it will continue to move back down. But if a new group of buyers comes in, triggers a V1 or a V2, then the people that bought this low sold here. If new buyers take over, then we don't have to worry about these sellers anymore because they sold that first dip down. So, you know, similar with Home Depot, right? I got in Home Depot off of this bounce at the bottom, but I wasn't, you know, as long as it kept going up, I would stick with it. But I wasn't getting married to this trade. I was really looking for a 2 or 3 day trade, because this is often what happens. You have a low, I bought a lower low, moved up. People that bought down here, which was me, at the first sign of some kind of sell-off, I'm going to get out. I got out. So if it continued to go up, I would hold it. But at the first sign of it moving down, all the people that bought down here, like me, I'd be looking to sell this. But tomorrow, or in the coming days, if we come back down maybe another day or two, and then a higher low V1, V2, those buyers are in this more for the long term, because it's a higher low. So, you know, if you have a lower low or a higher low, I would always acquiesce to the higher low, because the people that are buying that higher low are in it for the longer term. They're not so quick to sell on the trigger like I was quick to sell on the trigger when this lower low failed like it did today. Evan says, nothing jumps out at me today. Yeah, I agree, Evan. I didn't see anything either. I mean, I'm very light right now. Overnight SPY trade and the McDonald's put. So really no directional trades. Well, I guess the SPY is directional, but a little different. William Green. Hey, how you doing, William? Greetings. Almost missed you guys. Retiled bathroom this morning. Took longer than I expected. Oh, good for you. That's always good, fulfilling work, isn't it? When you retile something or do stuff around the house. So hope that worked out well. Hope your knees are okay. But thank you for coming by, William. Evan says, hit profit target on EXC and ATVI. SDC is trading water. Oh, that's right. Let's take a look. I have a couple over here. Oh, I even did the lines for you, Evan. Remember we talked about this. So you heard me talk a lot about double tops with bearish divergences. This is the double bottom with the bullish divergence. See, we have a low. See how deep the MACD bars are? Then we have a rally. We went to green. So we went red to green. So downward momentum, upward momentum. A couple days ago, we tested the previous low, but see how there were no red bars? This is what Dr. Alexander Eller calls a double bottom with a bullish divergence. And the reason he considers it a bullish divergence is this move down had this amount of momentum to the downside. Then we rallied, then we came back down, tested that previous low, but from a MACD perspective, the momentum has slowed. And, you know, the implication is if momentum is slowing at previous support, then likely that you'll turn up the other way. And that's exactly what happened. And so Evan took the trade here, I believe Wednesday when we had this V2. Here's day 1, day 2, day 3, day 2, washes out day 1, day 3, closes above day 1's close. So if you have a double bottom with the bullish divergence, it doesn't mean you just jump in. It's just setting up. But once it's set up, then you need a trigger. Well, here's your trigger. And Evan did buy that right at the end of the day, Wednesday, and he did hit one profit target today. So congratulations. ATVI. Let's take a look at that one. Aha. Fantastic. You just heard me talk about higher low V1s. Well, Evan bought this back on the 25th, if I'm correct, Evan. We closed below the 1 ATR channel. We rallied into the ATR channel. We had a day down, then we had a V2. Here's day 1, day 2, day 3, day 2. Thoroughly washes out day 1, day 3, closes above day 1's close. So that is a higher low V2. And look at this beautiful little trade he's had. Next day, MACD crossed over positively, so fantastic. So yeah, I can definitely see how you have taken profit targets on both of those. And then SDC, oh, Smile Direct. This doesn't look like a big move, but it's a huge move. He bought it back here when we went under 30, over 30, nice V1. We also rejected the negative third ATR channel. Remember, 90% of prices find support here, and this is a big mover. So from here up to here, 10%. So fantastic trades, my friend. Fantastic. Vix Crush, hey buddy, how you doing? I was watching one of your YouTube episodes last night on the VIX and the Contango, and this is David from Vix Crush, and always happy to have you here. And I really did enjoy your explanation of the Contango and the futures disparity between the months, the next contract periods on the VIX, and how there's a discrepancy between the VIX and the VIX futures and so forth, and totally made sense. And boy, you really know what you're talking about when it comes to options and when it's and the VIX. So I appreciate that. And if you guys have not subscribed, let me see if I can pull this up here. Move this over here. So here's David's YouTube channel, Vix Crush, and he has great podcast. He really does. A lot of information on options, like intense information on options. like very detailed information on options. So anyway, I like the background there, but thank you so much for coming, Dave. I appreciate it. And also wanted to highlight this. This is Steve Burns' website, newtraderu.com. He has some great courses. I've taken all these online courses. He has this video weekly newsletter where 3 times a week he goes through and does a breakdown of the stocks in his watch list. I listen to this every single time he has it, except for the day that he talked about Beyond Meat. I missed that one, unfortunately, and otherwise Beyond Meat would have been on my radar and I would have taken that trade. But I really look forward to this. Steve's breakdown on the markets. He definitely knows what he's talking about. It's clear and concise, and I subscribe to this, and I would suggest that you do too. But it's newtraderu.com, and you can follow him on at @sjosephburns on Twitter. But thanks again, Dave, from Vic's Crush coming. Appreciate it. Dr. Long says, I was long and got out below and just got out below here. Oh, on TLT? I think you're talking about TLT. But yeah, I mean, I would definitely be looking to get out if we hit the third, anywhere up near the third ATR channel if it shows some weakness. Because, think about it. If 90% of prices find support at the negative third and find resistance at the positive third, keep your eye out for some kind of entry near the third ATR channel. You should look for some kind of sell signal up at the positive third ATR channel. Dr. Long says, I also covered my short in euro currency below 110 this morning, 2-month trade. Oh, good. I don't have a symbol here for the euro, unless you have one I could look at. Christopher says, I subscribe to that, and it is excellent. Yeah, Christopher's talking about subscribing to, I believe, to Steve's newsletter, right? His video newsletter. Serious guys, there's a lot of things out there that you can go and subscribe to. I don't know, how much value they're worth, but Stephen Burns' newsletter, video newsletter, I'm telling you, is worth every single penny, guys. Really, really is. And go to Vic's Crush. Listen to that as well. He does a great job. I believe Dave was a professional options trader on the floor, I believe, right? E7. Oh yeah, on the. Oh, look at that. I don't trade futures, so but that yeah, okay. E7067, I believe, or the continuous contracts. Well, I'm glad to see that you covered your short there, because look what we have. We have a bottom with deep MACD bars. We have a rally back into the value zone with positive MACD bars. We now came back down, tested that previous low with a bullish divergence. This is lower than this. MACD bars are more shallow than the previous low. And, this is a perfect example of saying, okay, we have a double bottom with the bullish divergence, but it doesn't mean immediately jump in and get in the trade. You have to wait for a trigger. Well, here's your trigger. Here is your trigger, right? A lot of things going on here. Double bottom with the bullish divergence, but you need a trigger. Well, here's your trigger. Look at this beautiful V1 back in the value zone. And in addition to that, see the previous range, the low of the previous range? This V1 washed out the previous day's low, said that the market didn't like it, closed over. But in addition to that, we also had a false breakout to the downside. Here's the low of the previous low, false breakout to the downside, and close back above. So I would definitely, if I was short, be covering my short on this. And if I traded the euro, I would get long this 100%. Low, deep MACD bars, rally, positive MACD bars, test of the previous low with more shallow MACD bars, giving it a bullish divergence. Everything looks good, good setup, but you need a trigger, and here's your trigger. Trigger is beautiful V1 and a false breakout to the downside from the previous low. So this E7067, that, like I said, these are continuous, but you know, gives you an idea. Fantastic. All right. Anybody have any other questions? I'm stuck in my house. I can't get out. I have a tree in my driveway. I have no snow plowing in my cul-de-sac. I am literally stuck. And I'm getting close to getting out of food. I usually like have DoorDash or somebody drop by my dinner. They can't get in my cul-de-sac. So anyway, maybe you guys could paratroop in some food. That would be awesome. Frank says, I did sell half my position in NTNX at the close to lock in some gains. So I was telling you about being locked in here. If you guys have questions, we can do a little extended version today because I can't go anywhere, right? So if you guys have questions, let's make it worth the time, and I'm happy to answer them as you know, for another half hour if you have them. Whoa. Oh, okay. We looked at that. I'm glad to see you locked in some of that, Frank. You know, I mean, this is a huge kind of climactic bar here, right? Whenever you have these big, huge outsized bars, I really think it's a good advice in order to take something off the table on these big, just climax bars, really, right? Jake Walter. Hey, Jake. Good to see you. Thank you for coming by. I think this is the first time you've come by. Hey, I am new to trading. Any advice to get started? Whew. Well, I mean, in all seriousness, Jake, if you go to the description of this video, in the description of this video, I have 4 lessons. They're totally free. They're on YouTube. I talk about my entries, my exits, the indicators that I use, so forth and so on. And they're totally free. If you have some time this weekend, I would suggest watching those videos. Like I said, they're free. I tried to be informative with them, kind of go step by step, but I would watch those. That would be one piece of advice. Another piece of advice would be try to watch this live stream each day. Or at least watch the replay if you're not able to do it during the day, and you can kind of see how I approach trading. That would be my second piece of advice. My third piece of advice kind of is big picture. You know, identify your support levels, buy at support, sell at resistance, position size conservatively. 10% of my capital is what I use for any one position. Cut your losses quickly, let your winners run, make sure you have a good risk to reward ratio. But you know, I think you have a huge advantage, Jake. I get some of my students come to me and they've had 10 or 15 years of trading with bad habits. And if you can start trading without any prior bad habits, I think you have a huge advantage. It's like if you have a golfer that's golfed for 15 years, but he's kind of a hack and he has, you know, a lot of bad issues with this swing, just bad habits that he's ingrained. And then he goes to a golf professional and says, fix my stroke. That golf professional is going to have a hard time because he's going to have to unlearn him of all of his bad habits. Compare that to taking somebody that's never picked up a club, goes to a golf pro, and a golf pro teaches him the correct way from the beginning. Much easier to teach somebody who's never started golfing than someone who has all these bad habits. And it's the same thing with trading. So, you know, you being a brand new trader without any bad habits is a huge advantage. So if you can learn correctly from the beginning, I think you're way ahead of the game. So watch the videos that I have, the 4 videos in the description of this watch list. Watch the live stream in real time or watch it each day at the end of the day. Um, and look at support resistance levels, position size correctly, get out quickly if you're wrong, let your winners run, and also just put a little plug in for me. I mean, if you wanted to study with me one-on-one, you'd be a perfect candidate because you're brand new. So, but no pressure there, but I'm just throwing that out there as well. And also, subscribing to Steve Burns' newsletter would be a really good thing too. But strangely enough, you are in a really good position to be able to learn without any bad habits. So, but I would start with my 4 videos there, and if you have any questions, Jake, please let me know, okay? Evan says, this is terrible, stuck in and no food. I'm telling you, I can't even get DoorDash to come. They would never make it in this. They would never make it in the cul-de-sac. I called the city and said, "Can you guys get somebody up here to plow?" But they're still not here, and I can't get out because I have a big tree covering my driveway. I've got to get the chainsaw out. Jake says, "I would really like to get started." Yeah, we'll start with those videos. And again, if you want to take the one-on-one class with me, I promise you, it'll be worth your time and your money, but no pressure on that. But at the very least, watch those videos that I have there. Evan says, I have a question. How do you choose your ultimate profit target? That's a good question. That's a little bit of a tough answer. It depends whether I'm buying a dip or if I'm buying just a pullback to value dip, or if I'm buying a deep dip. For example, let's look at Home Depot. So Home Depot, this was a deep dip buy, obviously, right? So my ultimate profit target, because I have a math formula that I use for how much I scale out and where. But if I buy a deep dip buy, I have an initial profit target and I have an ultimate profit target. My initial profit target would be the 50 RSI. All right, that was pretty close. And so if it rejects that initial profit target, I would go ahead and get out. But I have to have an ultimate profit target. So on deep dip buys, generally, my ultimate profit target is going to be the 50-day moving average or the 1 ATR channel. However, if I were to have if I bought a return to value kind of entry, I would use the 6th ATR channel. Essentially, let me put it this way. If I buy under a 50 RSI, I'm going to use the 50-day moving average or the 1 ATR channel as my ultimate profit target. If I buy over 50 RSI, I generally use the 6th ATR channel as my ultimate profit target. And then my initial profit target is going to be the 70 RSI or possibly the 3rd ATR channel. But I do have a video, Evan, in the description, one of the ones I was telling Jake about on profit targets. And I go into detail on that. But just as a general rule, if I buy under the 30 RSI, my ultimate profit target is usually the 50-day moving average or the 1 ATR channel. If I buy over 50 RSI, my ultimate profit target is the 6 ATR channel or my initial profit target is the 70 RSI and my ultimate profit target is the 6 ATR channel. Does that help, Evan? And again, I have a video there in the description. It's about an hour long. Jake says, hey, thanks. You're welcome, bud. I'll tell you, whenever I can get my hands on a brand new student, I don't mean student as in a client, but someone that I'm working with or trying to help give advice to. I always like when someone has never traded before, because then they can learn the correct principles, the correct outlook on trading from the very, very beginning. If you've been trading for 5-10 years, you have a lot of bad habits that you have to overcome. So you have a huge position. Christopher says, my top trade, don't trade off your phone. Have a trade plan. 100%, Christopher. Thank you. Yes, and I didn't mention that. Have a plan. You have to have a plan. What percentage, how am I position sizing? Where am I going to get out when I'm right? Where am I going to get out when I'm wrong? Having a plan. And then more importantly, sticking to that plan, right? That's why I always talk about trader psychology, because it seems easy to come up with a plan, but in practice, it is much more difficult to stick with that plan. But position sizing conservatively is probably one of the best ways to be able to stick to your plan. But you are totally correct, Christopher. I've never traded off my phone in my life, actually, if you can believe it. Jake says, I would like that. There's a link to it. Yeah, there's in the description of this video, there's 4 links, 4 separate lessons. Econ. Hey, how you doing, Econ? I think this is the first time you've been here. I don't recognize the name, but thank you for coming. Hey, Greg, talking about these deep dip buys, any thoughts on weekly, daily TCS? Seems like an interesting buy at the current bottom. So TCS, is that a symbol? Let's see. Yes. Oh, weekly. Yeah, look, if you want to trade weekly, I would do the same thing. Did it get under 30 RSI? Intra-week, let's take a look here. So this bar here does look like intra-week it closed under 30 and then back over 30, which, I would go ahead and buy that as well. That was your only signal, with just the under 30, over 30. There was no V1 or V2 at the same time, which would have been helpful. This might look like a double bottom with the divergence. Here's a low, we rally, we have a lower low. MACD is more shallow here than here, but technically you need some green in order for this to qualify as a double bottom with a bullish divergence. But the momentum was slowing. But even with that said, yeah, you could have bought this because intra-week it went under 30 and then closed back over 30. I'm fairly sure. I mean, it's 31.90, so very likely it bounced right at the 30. So, I mean, would I take this right here, right now? No, I wouldn't on the weekly. But yeah, I mean, this would have been the place to have bought it for sure. And, back to the question of what would be my ultimate profit target on this if I was trading weekly. So 50 RSI would be my initial weekly profit target. Let's take a look where 50 would be. So 50 would be right here. Now, if my initial profit target, my initial 50 is real close to the 1 ATR channel, I want to give myself a little space over that for my ultimate. So my ultimate, see how close the 50 is to the -1 ATR channel. So on this particular case, my ultimate profit target would be the 200 week moving average. And then on the daily, did we go under 30, over 30? All right. So this is what I do with my students a lot. We go bar by bar. Under 30? No. Next day? No. Bounced right at the 30 though, didn't it? Yeah, looks like this one, I'm not sure if it went, I think it bounced right at the 30. But I probably, honestly, I mean, this is obvious going back, but, it bounced off the 30 and it had a V1. So yeah, this is something I would have been interested in taking. I mean, it looks like it bounced right at the 30. I would not have taken it just on the bounce at the 30. But because you had the bounce at the 30 and the V1, this would have definitely been a place for me to look at taking this. Then my 50 would have been my ultimate profit target, and my initial profit target, 50 RSI. Probably the ultimate profit target on this would be the 50-day moving average. But yeah, I mean, you can see on multiple time frames, the 30 RSI did catch some support here. But yeah, this would have been good. I mean, let's take a look at that RSI level again. All right, so 33. This also could have bounced at the 30. I can't go back in time and check, but this is very likely that this bounced at the 30. Don't think I would have taken that, to be honest with you. This one here very likely did go under 30 or bounce at 30, and then you had the V1. So, you know, that would have been a good entry and would have been a good trade so far, huh? Zach Ham. Hey, Zach, how you doing? I think it's the first time you've been here. I appreciate it, and hope you keep coming back. Zach says, hello, can you help with some questions about ETFs? Yes. I'm happy to if I have the answers. Just let me know what your questions are, Zach. Econ says, interesting way of seeing things. Thank you, Greg. You're welcome, sir. Or ma'am, not sure. But yeah, I'm glad we had some new viewers today. We had Jake, and we had Econ, and we had Zach Ham. So yes, Zach, if you're still there, if you have any questions about ETFs, please let me know, and I'll do my best to answer. And we had Glenn Moody today, which is fantastic. And we had, where'd she go? Where's our other friend from Singapore? Wendy. Wendy's our friend from Singapore. And we had Wendy come by today. So we had some new viewers today. This is awesome. I hope you all keep coming back. All right, if anybody has any other questions, please let me know. Okay, here's Bing He. For Home Depot, I was thinking to follow you to close off the position. However, for this mean reversion, my rule is to have only one target and one stop loss. I hope I have made the correct decision. Well, listen. There's no wrong decision, Bing He, as long as you have a plan. And my plan is a little different than yours because I phase out. You're not able to phase out because of the high commissions there. And so, yes, if I can't phase out, if you can't phase out, it's fine. It's fine to have one stop, one profit target, 100%. Right, and you know, if you took the trade here with the V1, the under 30 over 30 in the V1, then it's fine to say, look, I'm going to get out at the 50 RSI if it rejects the 50 RSI, or I'm going to get out with a close below the 30. That's totally fine as long as it's part of your plan. Did you make the right decision? Who knows? You know, who knows? But you never know whether a trade's going to be winner or loser, right? You just never know. You wait for the setup, and if your plan is one entry, one exit, you get out if you hit your exit, you get out if you hit your profit target. Totally fine. I mean, this might go screaming up on Monday, and I'll be like, dang, I should have held it, but I'm glad, I'm glad for Bing He. Econ, yes, I do stream daily. Today was an early day. Generally, it's the last, normally, because not the short day, the holiday, but usually it's the last hour of the market, Econ, whatever time, the last hour of the U.S. market, whatever time that is for you. Zach Ham says, let's say you invest in some ETFs through Robinhood, and then let's say 2 years from now, Robinhood goes down. What happens with your funds? Well, that is a good question, Zach. Honestly, I don't know. I would imagine that through regulations that you would, well, kind of hesitate to say this, but I would imagine with big brokers and so forth, that there's some safety mechanisms in play, but I'm not quite sure. I think it's rare that happens. One of my suggestions, Zach, would be to, now that commissions are zero, going to somebody like a TD Ameritrade or a Charles Schwab, a big name, very strong, stable type of brokerage, that would be my suggestion. Me personally, I don't think I'd mess around with Robinhood now that there's no commissions. It's the big, stable brokerage firms like Schwab or TD Ameritrade, things like that. So I don't think I have an exact answer for you what would happen. I don't think it happens very often because of the regulations and their reserves and so forth. I would imagine you would get your funds back, but I can't say that for sure. But if I were you and to be safe, I would probably go to somebody very strong and established like a Charles Schwab. Does that help, Zach? Is that what you're looking for? Frank says, when you take a V1, V2 with a trigger, have you noticed a pullback in the broad market has less impact on the stock? I guess my answer would be probably yes. I mean, when the market as a whole goes down, of course, it is going to affect your stock as well. If you were long with the V1 or a V2, but because of the V1 has already told you that it rejected that price, I think I think you would see a small tendency for that position to hold a little bit stronger than the general market. John says, SIPC broker insurance. Okay, good. I'm glad somebody came to my rescue on that one. So John is saying that brokers have an insurance, SIPC broker insurance, that would, I guess, cover your funds if the brokerage went out of business. And Zach says, I think SCIC insured. Okay, so both John and Zach are up to date on this, not FDIC. Yeah, FDIC insurance is is for banks, not brokers. Thanks, guys. Thanks, John. Thanks, Zach. Robinhood says, Robinhood is well capitalized with venture capital. Okay. Well, I guess the broker insurance would cover it anyway. Mansell says, the bank behind Robinhood are FDIC insured, but I agree with Greg regarding a big bank. Yeah, I mean, if you're concerned about it, I would probably go with the one that's the most well capitalized and strongest, been around the most. Zach Ham says, my second question would be, if you invest in an ETF, but let's say the 98th company falls, the next time you invest in the same index, does the new company just fill the slot? I can't say this for all ETFs. But I know with the S&P 500, S&P 500 is a self-regulating ETF, so they have certain requirements as far as market capitalization, returns, liquidity, and so forth. So the S&P ETF is a great ETF because it's self-regulating. The bad ones get taken out. A new company with better financials or better performance gets put in. So it weeds out the bad ones, puts back in better ones. And I would assume for most ETFs that's the case, because ETF, and of course it depends what kind of ETF you're talking about. Some ETFs are just based upon one thing, right? Like gold. GLD is an ETF on one particular holding, just gold. S&P 500 has 500. Russell 2000 has 2,000 companies. But yes, in general, if one fails, it gets taken out of the group of the stocks or whatever's in that ETF, and a new one and a new one is replaced. Zach has strong like Vanguard. Would that be better than Robinhood or Schwab? Well, Vanguard's very strong. Vanguard's a mutual fund. I believe, right? Vanguard's a mutual fund. But yeah, I'm sure Vanguard will be totally fine. I'm sure Schwab's fine. I'm sure Robinhood's fine, right? But yeah, I think all of those are fine. But yeah, definitely Vanguard's very strong. Would it be better than Schwab or Robinhood? It depends, because Vanguard is, I believe, it's just mutual fund. Not, I don't know if they offer trading as of trading, but I guess Zach is just talking about ETFs. So you can buy an ETF through Vanguard, I'm sure. But I like Vanguard or Schwab better than Robinhood personally, but nothing against Robinhood. Boy, Amazon really sold off there at the end of the day, didn't it? All right, any other questions that you have, please let me know. Happy to answer them. If you have any jokes, that'd be awesome too. Ah, we had some new people here today. That's really great. That's really, really great. Did anybody take any trades today? Jesse, hey buddy. Jesse says, take care, Greg, and all. Good luck with your snow there, Greg. Storm moving in here tonight. Oh, all right. Well, maybe it's a storm we had earlier. Good seeing you, Jess. Anything I can help you with, sir, you just let me know, all right? Be safe out there with your job. Appreciate what you do. I think Jesse had VTR today, so it was down a little bit. Looks like it closed below the previous days. Oh, it's only at 30.07. Okay. Econ says, exchanging interesting stickers sometimes. I don't know what that means, Econ. Hey, JT, good to see you, sir. JT snuck in here at the end. Thank you for coming by. Always nice to have you, JT. Hope you had a good Thanksgiving. Hope you have a nice weekend as well. Anything I can help you with, you please let me know, okay? Dr. Long is, oh, that's right. He's long AGQ and VIX. Well, VIX looks like it's moving on up okay. Let me take a look here. Yeah, let's look. What did AGQ do at the end of the day? So Dr. Long is getting a little bearish, it sounds like, right? Well, excuse me. Yeah, so AGQ, look at this nice V1, right? Today, washed out yesterday's low, closed above yesterday's close, closed into the value zone. MACD did go positive, so that's good. Let's look at VIX. VIX, look at that, getting close up to the 30 RSI. Not quite though, but going under 30, I'm sorry, going under the third ATR channel, over the third ATR channel is also always positive, and getting above 30 would also be good. But I mean, the VIX has been so beat up here. I'm not surprised we're having a rally, a little bit of a rally. Christopher says, I have one question. Do you ever use TPO charts? Boy, why does that sound familiar? What is that, touch and point or something like that, right, Christopher? I don't. To answer your question, though, I do not. Do you use them? Oh, Econ says tickers. Sorry. Yeah. We are exchanging some interesting tickers. That's what I like when you guys put the stickers in here, because I have my watch list that I look at all the time, and so I don't usually go outside of this, but then, people have me look at other symbols. I'm like, oh, that looks interesting, and that looks interesting. Evan says, no new trades for me today. Thanks for streaming today. We'll see you on Monday. Have a great weekend. Thank you, Evan. Appreciate it. Good seeing you. Good trades today. Market profile. Oh, time price opportunity. No, I don't. I do not. Christopher. What are they? Hey, Wayne, good to see you, bud. And Wayne also says time profile. Yeah, I do not. I do not. Do you guys use them? What do you think of them? Dr. Long says Stottlemyre. I'm not sure what that means, Doc. If we look at the VIX, not the VIX, but if we look at the index for the VIX, look at this, up 7% today. That's a big gap. That is a big, big gap. I'm doing well, Wayne. Thank you. Well, other than my awning collapsing, a tree falling over in my yard, blocking my driveway, and not able to get out of my house because no snow plowing. Other than that, pretty good. Pretty good. Hoping I can get this awning and this roof fixed. I mean, this was horrible. What a horrible. What happened? Katie got me up in the morning to go outside. And she went outside. I almost left her outside. In the last second, I said, no, come back in. Went back to bed, laid down, heard this huge crash. And literally, if there's a good chance if I would have not brought Katie back in, that awning would have collapsed on her because it's right where she lies down. So I'm very, very thankful for that. Could you imagine? But yeah, tore down the awning, just collapsed, tore down the gutters, the fascia, the soffit, siding. It was horrible. Christopher said, he just started looking at them. Oh, interesting. Yeah, I have no idea what those are. Dr. Long says, bell curves developed by Stottlemyre. I see. Zach says, sorry, I had to step out for a moment. Did you say Vanguard would be a good brokerage to go with? Who's going to carry out right now? Well, I think Vanguard's just fine. I don't know if Vanguard allows just like trading like iTrade or WeTrade, but for ETFs, I'm sure you can buy. But yeah, Vanguard's has a very good name. Zach says, and I'm very sorry for having to ask this, but is there any way you could answer my second question? I think that I did, Zach. Okay. Yeah, so most ETFs, if they have a group of stocks in that ETF, if one of them fails or goes out of business, they're replaced by another, like the S&P 500. There's 500 stocks. If one of those companies in the S&P 500 fails, they will kick that one out of the ETF and they will replace it with a new company. And sometimes they'll kick out companies if they don't have enough in sales or their market capitalization is not high or they've had a huge decrease in their stock price or there's not enough volume. They'll get rid of that particular company and add it back in with a better, successful company. Some ETFs like gold just have one particular product or commodity that they're basing it off of. So, gold, I'm sure will always have a price. So, but I think what you're talking about is, with like the S&P 500 or the Russell 2000 or the Dow Jones, like the Spider or the Qs or the Diamonds, they like the spider or the diamonds is the Dow Jones Industrial. There's 30 of them. If one of those companies were to fail, they would get kicked out of there and replaced by a better company. Does that answer your question, Zach? That if one fails, yes, they're replaced by someone. They're replaced by a different company generally. Okay. Hey, Steve Burns just said, I crossed over 200,000 followers on Twitter today. Thank you all. I appreciate everyone who takes the time to read my tweets. I try to be informative, educational, and at times entertaining by sharing what I find interesting. I am honored. Oh, that's great. Congratulations, Steve. 200,000 followers on Twitter. That is great. So if you guys haven't followed Steve, follow him at @SJosephBurns on Twitter. Just look up Steve Burns. Way to go. Congrats, Steve. And thanks for coming today. I appreciate it, my friend. Zach says, and then you would lose your small investment in that stock that got kicked out, or does it transfer to the new one? Well, yeah, I think it does transfer to the new one. But yes, I mean, if that stock is doing poorly, it's going to reflect in the overall value of the ETF. But then when the new stock comes in, that new value gets replaced. But if stocks in ETF decrease in value, then your investment decreases in value. But if they take one out, then the value of the new one coming in is reflected in there. Frank says, if Vanguard or Schwab collapse, we've got big problems. Boy, you said it, Frank. If Vanguard or Schwab collapses, we've got big problems. We would have huge problems. Zach Ham, what happens to our investment at that point? Well, I think the value of your investment is always based upon the aggregate or the collection of the stocks that are in the portfolio and what the investments are. As I said above, though, the brokerage insurance would most likely insure what if a company went out of business, what they would insure what the value is, the current value of the aggregate value of what's in the ETFs. I believe. Sorry, Zach. I wish I had a little bit more precise answers for you, but it's all based upon what the aggregate value is of that particular ETF. Of all the stocks, what they're worth, and then what the aggregate value is. But I really do believe that if a brokerage went out of business, that you would not lose your money because it would be insured with the brokerage insurance. Christopher says, have a good weekend, Greg. You too, Christopher. Thank you for coming. Enjoy your evening in the UK. Zach says, big help, man. Thanks. You are certainly welcome. All right, everybody. So listen, Zach, thank you for coming by. Appreciate you coming by your first time. Nice to have you here. I hope you keep coming back. Christopher Hitchin, thank you, sir. I will have a good weekend. Always nice to see you. Frank, always nice to see you. Have a good weekend. Hope you have a good Thanksgiving. Dr. Long, good seeing you. Thank you always for your contributions. Appreciate that. You always have good comments and observations. Wayne K, thank you. Hope you have a good weekend. Hope you had a good Thanksgiving. Hope to see you again. Evan, good to see you, sir. I'm glad you had some good trades today. Econ, thanks for coming by for your first time. Appreciate that. JT, good to see you, sir. Jesse, thanks again, bud. And hope you have a nice weekend. Hope you had a good Thanksgiving. Hope you're doing well, and hope to see you next week. Aman Solo, good seeing you. Thank you for coming by as always. Hope to see you again. John, thank you for that information about the broker insurance. Always nice to see you. Bing He, hope you have a good evening, good morning, excuse me, in Singapore. And we'll be rooting for your Home Depot trade, bud. All right. And Evan, good to see you, sir. Thank you for coming by. Jake Walter, thank you for coming by. First time. Hope you keep coming back. But if you do, remember, last hour of the regular stock market most days. Today is just an exception. And go, if you get time this weekend, go to the videos in the description of this video or on my channel. There's a list there of my lessons. But if you just go to the description of this current video, I think the most important 4 lessons are in the link below. But try to watch those. If you have any questions, let me know, okay? And David from VIX Crush, good to see you, sir. Thank you for coming by. And yeah, go to his channel on YouTube, VIX Crush. Very informative information on options, and he does a great job. And William Green, glad to see you. Thank you for coming by. I appreciate it. Steve Burns, thank you, sir, for coming by. Hope you had a good holiday. Congratulations on passing the 200,000 mark on Twitter. Proud of you, my friend, and thank you for everything you do, all the education, all your books. You really help a lot of people, and I appreciate it for sure. Joshua Kaufman, good to see you. Thank you. Hope you had a good Thanksgiving. Glenn Moody, good to see you. Thank you for coming by. I think this is your first time. If I can help you with something else, please let me know. Gamer Squad, good to see you, my friend. And listen, do something for your daughter at 10 years old. Just put away $30 a month and a little something for her. Unbelievable amounts of money that can turn into by the time she's retired or by the time she's going to college. Yeah? So I think it'd be a great thing to do. Bing He, good to see you, buddy. Oh, we said that. Let's see. Wendy Yo, thank you for coming by from Singapore, and hope you keep coming back. Thank you so much, and I hope you have a nice nice morning and a good weekend. And John, I think I said, oh, that's right. But John, thank you so much. And we looked at that NVEE. So, all right. Well, that's about it. Hope the tree isn't too big. Thanks and good luck. Thanks, John. Yeah, I'm going to get out there with the chainsaw. And Frank says the U.S. government would have to step in. That's true. That's true. Thanks for that, Frank. All right, everybody. Wow. So we did a 2-hour one today. How about that? That's our longest podcast ever, but it was fun. And glad we got a few extra minutes in there to hopefully answer some questions. So, by the way, if you haven't hit the thumbs up button on the way out, hint, hint, I would really appreciate it. So if you could, just put the mouse down there, click that little thing, and that would be awesome. So have a good weekend. Be safe. Go out and do something nice for somebody today. Just a smile or a wave or just something, right? You might be able to make their day, and then they may make somebody else's day, and so forth and so on. So we'll see you hopefully back here on Monday during the last hour of the market. So take care, everybody, and thanks for coming. Appreciate it. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.